have a stock alert to make you aware of. Shares of Bitcoin holding firm Strategy are on pace for their lowest close in more than 2 years. The stock is down 4.7% to $104.31. Annual high, $457. Strategy's most popular preferred stock, it's called Stretch, which pays an 11.5% annual dividend, actually fell to a record low last week, limiting Strategy's ability to issue new preferred capital to buy up Bitcoin, which is their business model. This conundrum is propelling investors to ditch their shares of Strategy. Right now, Bitcoin is down about 3%. Closing bell, we are about 3.5 minutes away, and the Dow just turned positive. It's been straddling the flat line, and look, it's a green day for the Dow, not by much. It's up 13 points, S&P down 96, NASDAQ is the loser here, down 531 points or 2%. And listen, if you're watching the oil market, and who among us is not, because energy is a key issue here, and you're trying to figure out which way that trade goes, or you're waiting on Kevin Warsh for clues on where interest rates are headed, today's countdown closer says, stop. The goal is not to predict the next move. It's to build a portfolio where it won't matter if you get it wrong. Joining me now to tell you how is Simplify Asset Management's Head of Multi-Asset Solutions and Managing Director, Paisley Nardini. Simplify manages $14 billion. Okay, how do I do that where I don't have to worry about what the central banker is going to say or do, and I don't have to worry about what's going on in the Strait of Hormuz?
It sounds more difficult than it actually is. The good news is, the solution to this is you diversify, right? Sometimes that sounds boring. It doesn't sound as fun. You have your eggs spread out across, not all in one basket. But ultimately, what we're looking at from an economic and market backdrop right now is really high valuations. Stocks are quite rich. TBD on whether or not we see a sell-off. Today is kind of some maybe initial inklings of some risk assets running into a wall, I would say. So from an allocator's perspective, you're looking at have a balanced portfolio. You're looking at diversifying your risks, spreading them out, thinking about how to stay in the market, but do so prudently.
Okay, let me push you on this. Value stocks. Yep. Value stocks have not really taken a leadership role lately because AI stocks are sucking all the oxygen out of the air. And depending on the day, energy stocks. So how do you view value as a piece of making sure you have a portfolio that is inured against any of these big headlines?
So here's what might actually be surprising to a lot of people listening right now. Value stocks have actually done quite well year to date. If you look at the Mag 7 in particular, even though they've had a really strong rally off of the market bottom at the end of March, value has been this kind of quiet deliverer in your portfolios. And ultimately, the reason for that is because we've seen rates move higher. Investors want cash flows that are nearer in time horizon and more definitive. And so that puts pressure on growth stocks. And so there is some pockets of value, no pun intended, within the value-oriented market. And we've seen that this year.
You like equal weight tech, materials, utilities.
Yeah.
Some might say materials, utilities, I'm falling asleep, but yes. You say boring is beautiful.
I think boring is beautiful. As much as we like to follow the ticker every day and ride the highs and then ultimately the lows, if you're really thinking about building a balanced portfolio, it's thinking about how can you stay in the market and do so prudently. So the equal weight tech sector, this might be surprising to some. If I were to ask you year to date, the market cap weighted tech ETF versus the equal weight tech ETF, which one do you think is outperformed?
No, I mean, I know that I would have thought it might be, most people would guess it would be the market weight.
Absolutely. And the answer is they've actually performed roughly in line with each other, which just tells us there's actually a lot of strong companies within the broader technology sphere that if you're in just passive market cap, you're not getting exposure to those.
Paisley Nardini, thank you very much for telling us how to put together that kind of portfolio where we don't have to worry about all of this red on the screen today. We'll see you tomorrow. Cutlo's next.